given the market condition right now, which is very volatile, can you recommend the portfolio construction and allocation to be resistant for this market?
Yeah, I mean, I think it really again comes down to the type of investor that you are and the type of risk that you want to take. And so if you think about maybe risk in three ways, you have conservative portfolio, maybe a moderately conservative or moderately aggressive portfolio, and then an aggressive portfolio. You're going to get different types of asset allocation. So in a conservative portfolio right now, we would see allocations to gold, we would see allocations to fixed income, particularly something like treasury securities or ETFs that had a more stable outcome, where investors don't necessarily want to take a view on the direction of the market. I think a moderate portfolio, more moderately aggressive, has more growth in there, so a bit more of a blend of market exposure, where people might have some exposure to broader indices, some yield generating investments in there. And then for the aggressive portfolios, that's where we see things like leveraged ETFs, where people embrace the volatility. They want to see stocks moving around because that's the opportunity to make a 10% profit or whatever the amount is that people are looking at over short periods because stocks are moving around so quickly. So there you might see more allocations to leveraged ETFs, to growth stocks themselves, or to very high yielding securities like YieldBoost.
I see. So YieldBoost fits into the moderate risk, or? I
think you could have it in either moderate or aggressive, depending on what your sort of investment objective is. But where we see the YieldBoost fitting is for people who prioritize income. It generates weekly income distributions.
Weekly?
High income generation every week. So it's for people that prioritize a high amount of yield and they want it every week.
Very interesting.
Yeah.
Can you give us some sample of the underlying of the YieldBoost?
So there are different exposures in the family, starting from exposures on ultimately single stocks like Tesla, Nvidia, broad equity indices, the S&P 500 and NASDAQ, and we have exposure to Bitcoin also. So all of these strategies work in the same way, where we sell options on these underlyings, and that enables us to generate premium from selling the option, which we distribute out to investors. And in addition to that, we buy a put option to help protect against some of the downside if the underlying asset falls. But they're part of the options income family, covered call ETFs, other things that have proved very popular around the world, generating lots of income.
I see. So our investors do not have to go through option chains to find the lowest price of options by themselves, right?
Yeah, that's right. And this is a good example of a strategy just like leveraged ETFs that's evolved from taking something that investors were doing already themselves, in leverage doing margin loans to buy individual stocks, packaging that up and making a product that people can buy with one ticker to give 2 times exposure to stocks. In the same case, YieldBoost is taking a strategy that investors were looking at selling options themselves on different stocks and choosing which options to sell at which strike price, taking all of that hassle away and packaging it in one ETF and then selling that to investors as YieldBoost.
I see. How can we find YieldBoost in the stock market? Can we search for the YieldBoost, right?
Yes. All of it is available on our website, I'm sure on the Webull platform.
Sure.
And you have some of the key tickers out there. TSYY is the YieldBoost Tesla ETF. NVYY is the YieldBoost Nvidia. XBTY is the YieldBoost Bitcoin. And then you have TQQY, which is on the NASDAQ, and then YSPY or YSPY on the S&P 500.
So Kanya Shares has both for the index and single stocks.
That's right.
YieldBoost. That's very interesting. Okay. Is there anything that you would like to share with Thai investors and as a recommendation or a suggestion today?
I think that it's a very exciting time to be invested in markets, but particularly the US market, that despite that there's been quite a lot of volatility this year, I'm very optimistic about the US market and the potential for the US market over the next few years. That I think we're getting to the end of the volatile phase of markets around the trade war, and we see the administration moving towards other growth objectives like deregulation, which I think will be very positive for markets. So it's a good time for people to be thinking about investing and investing in the US markets.
I see. Wow, that was a very informative and insightful sharing that you have. Thank you. Thank you for your time, Will.
Thank you so much for having me. Absolute pleasure to be here.
Thank you.